Hello and welcome. You are watching Property Hotline with me, Kavita Krishnan. We're answering all your home finance queries today with Kartik Jhaveri. Kartik is the founder and director of Transcend Consulting India Private Limited. Kartik, welcome to the show. Let's take a question that's coming from Purnima Rao. Now, Purnima wants to know that she has a son who stays with her in Mumbai. And the son has also bought a flat in Bengaluru. Now, she wants to know that if he gives this out on rent, can she claim full interest on the housing loan, or will this be treated as a self-occupied property with deemed rent? She also wants to know if there is a provision for overdraft facility on a housing loan. Kartik, the question is not very clear, but I'm assuming here that there is some problem with, the commas and the full stops. And the question probably is that Purnima has bought the home over here in Bengaluru, and she also owns a home in which her son stays with her currently.
From what I understand, Kavita, is she's saying that her son's staying with her, but he has bought a house in Bangalore.
That's what I'm saying. The question, the way it's been framed,
and also there's a little contradiction in terms of if the house is going to be on rent, then there is no question of deemed rent. So exactly. I think we will take the essence of the question and try and answer it. So it's very interesting here. Now what happens is, that is the first property. Again, we are making an assumption that the son has bought the first property, and the one that they are staying together obviously is not in the name of the son, right? So the Bangalore property, if they are actually going to put it on rent, which means if they are going to actually earn a rent, then any amount of interest is going to be deductible because they are going to offer that as income from house property. However, if that house remains vacant, which means then he will qualify under a different section of the Income Tax Act, which will say that, you are not living in your house for reasons of employment or profession or whatever it is, it might be, but it's basically your self-occupied property. And because of that, there is not going to be a deduction to any extent, but that interest deduction will be then restricted only to 2 lakh rupees because it's your self-occupied property.
So then let's assume that this is property that her son has bought.
That's right.
And if we go with that assumption, what would you advise that he does? Should he then, claim rent on it, rental income on it, claim notional rent on it, showcase it as, property that has been leased out, or should he go with taking a basic minimum on it?
Kavita, the question doesn't arise really because you see, this is his first property. Right. So if it remains vacant, then we are absolutely clear that he can claim his deduction only to the extent of 2 lakhs for interest and of course 1.5 lakh under section 80C for principal, because this becomes like a self-occupied property. Maybe he's not physically occupying it for whatever reason, but that is his first property. So the deduction on interest is restricted up to 2 lakh rupees. Now, if the property actually is put out on rent, so there is actually a tenant or a licensee staying in that property, then he is actually earning money, which he then has to offer under the head of income from house property while he files his income tax return and when he does his computation of income. So in that scenario, any amount of interest that he is paying will be deductible from his from the value of the property. So that's basically how it will work out. So they need to understand the difference very, very clearly. If it's on rent, then your full income will come. In this particular scenario, so every scenario is different because this is his first property, you see.
Right. So essentially, what you need to understand here, Purnima, is that this is a call that you need to take. Yes. If you choose to rent out that property, and if this is your son's first property, if you choose to rent it out, he can claim exemption against interest paid on that on the housing loan. However, if he does not give it out on rent, it will be considered his self-occupied property, and in which case he will be, he can only avail the basic minimum exemption that everybody gets on a home loan.
That's right.
She also has another question. She wants to know if there's a provision for overdraft facility on a housing loan.
There is no overdraft facility on a housing loan. What she is probably referring to, I understand, is a top-up loan on a housing finance. So once you've taken a loan, when the value of the property goes up, then the bank or the lending institution again does a re-evaluation of the property, and then they may be happy to lend you up to 80% of the value of the property. But that's known as a top-up loan. So that top-up loan is available, but if you think about an overdraft facility, then that's not really allowed on a housing loan. Unless, of course, again, she's referring to those products which are brought in by some banks where you actually have a current account linked to your home loan.
I was just going to ask you
and then that becomes a different kind of a mechanism.
Could you elaborate on that very quickly? We've got somebody waiting on the phone line with a question.
So that's a very interesting account where the way you operate that account is you have a current account linked. So any amount of money which sits in your current account is then assumed to be a deemed prepayment for that particular day. So, and then if you want to use that account, by all means you can use that account. But so long as you keep it in the bank account, then your interest calculation reduces to the extent of the amount that you have parked in the bank account. So that's basically how it works. It's a very interesting product, but we could have a detailed chat on a subsequent
And Purnima, hope we've answered your question over there, because
yes,
like I did tell you, the question was worded in a little vague fashion. Moving on, we have Vishwadeep, who's called us from Meghalaya. How can we help you, Vishwadeep?
My question is, I have purchased a flat against which I am taking tax rebate.
Sorry, Vishwadeep, could you ask your question again? It was not very clear.
I have availed a housing loan against which I am taking tax rebate on the interest portion,
Okay.
as well as on the principal.
Okay.
Now I have purchased a second flat. Do I get the same benefit on the second flat also? Can I get tax rebate on the interest as well as on the principal repayment for my second flat also?
In fact, Vishwadeep, you are in for some good news. Kartik, I can see you smiling over there.
Yeah, absolutely. So Vishwadeep, yes, the answer is yes, you get benefit on both. But now what you need to understand is that under section 80C, which is 1,50,000, which is the limit for that section. So whatever principal you are repaying, within the overall limit of 1,50,000, you'll get that as the maximum exemption. For the first house that you had taken, and for which I'm guessing that you are also living in that house, for that house you will get your interest deduction up to the extent of 2 lakhs, because that's your self-occupied property. Your second property, whether you actually give it out on rent or not, it becomes like a let out property or a deemed let out property, whatever is the scenario. So on that property, whatever is the amount of interest that you are paying is then deductible from that calculation of income from house property for the second property. So on your second property, bottom line is you get better benefits, or you get larger benefits.
Right? So there it is. A second home is actually very prudent. A second home loan, in that fact, is actually a very smart thing to do from a tax perspective. However, you do need to ensure that your finances can support that kind of an investment. Moving on, Sridhar has written in on our website. Now he wants to know if it is a good idea to prepay the home loan for the rest of the tenure after 10 years of payment, and if he'll receive any tax benefits on the second home loan. So he wants to prepay a loan and take a second home loan.
Correct. So now, the second part of this question is pretty much similar to what we've already answered. So yes, you will get benefits on the second home loan that you take. But like you very rightly mentioned that, look at your overall financial situation. Just because you're getting tax benefit doesn't mean you should really go ahead and do this, because it's also going to affect your cash flow. And remember, the interest component that you're paying is actually extra money. You could, invest your money, have the principal, and basically buy the home outright at some point of time, maybe in a few years down the line. But so you need to really be very careful of your calculation there. So just don't rush in because it's tax benefit. Now, having said that, what is happening is, can you prepay your loan? Of course you can prepay your loan. But like we always say, why don't you try and absolutely not prepay your loan? Because now you're in the 10th year, 10 years is already over. So a large part of your principal is already repaid. I'm assuming that you have a 15 or a 20 year sort of a loan. But even in that scenario, if your extra money or this amount of money that you're thinking of making a prepayment with, if that is invested somewhere, wisely, which earns a higher rate of return, consider using profits from there to repay. Now, all this is again, subject to the fact that your income can accommodate to EMIs. Because even if you make a prepayment, it still doesn't mean that you are going to be eligible for the next loan, or you're going to be in a situation to fund the cash flow, because ultimately it all depends on your cash flow. The bank will be happy to give it, saying that one loan has gone down and you're taking another loan from another side. So your net effect is the same. Maybe you could use this cash and actually use it for the down payment of your second loan. That's also a way of looking at things. And thereby you will have your second loan which will be much lower, which in turn makes your cash flow look even more stronger, and which means you can even invest from your cash flow and not your lump sum. So you have all these options available, and there are lots of options to go by. But generally speaking, I would think don't prepay, invest your money, use profits to prepay.
Use your profits to prepay, and those are among those questions that Kartik enjoys enjoys answering. In fact, like he keeps saying, and this is what we also say, it's best if you can build one asset alongside another asset rather than, break down one asset to build a second asset. Really doesn't make sense, and the tax benefits on the home loan doesn't hurt either. We have Mr. Neema who sent in a query through email. This mail comes from Itanagar. He says that I'm planning to construct a 3 to 4 story house in Arunachal Pradesh. The cost of construction is around 70 lakh rupees. How much loan amount am I eligible for?
Okay, so firstly...
he doesn't give us the salary.
Yes, I know. But having said that, Kavita, it's not so difficult for us to estimate and give him a ballpark indication. Now, if your construction cost is going to be 70 lakhs, so most banks are willing to finance you somewhere in the range of 70% to about 80%. Now, that depends on the, the area and the geography and, the bank's own rules. But as a rule of thumb, you can say 70 to 80% is what you will get as a finance. Which means you need to obviously make sure that 20 to 30% of this money, which is somewhere in the range of 15 to 20, 21 lakhs, is something that's available with you, which you will have to put in as your own contribution, and then they will be happy to fund your construction project. That's not a problem at all. So you can use that as a ballpark. Now, how much is the installment that's going to be there? Again, this loan then pretty much works like a standard home loan, whereby you will have a 15 or 20 year tenure. Rule of thumb will say that for 1 lakh, your EMI will be somewhere in the range of about 1,000 rupees. So which means if your loan is going to be 50 lakhs for this property, your EMI is going to be somewhere in the range of about 50,000, 55,000, which means your income will have to be somewhere in the range of 90 to 100,000 at the bare minimum. So that way you can just work backwards and see if this all calculation and mathematics works.
Still to simplify it further, Kartik, if you could just give Mr. Neema a sense, how much percentage of your salary should actually be your home loan? Or how many times of your salary are banks willing to lend to you? That is one.
Right.
And secondly, how much of your salary should you be willing to pay as EMI?
So, let's say salary or income, so for the benefit of everybody, I would personally be very comfortable with a figure of 30 or 35%, that you don't cross that. When you don't have a choice, okay, in exceptional circumstances, maybe go to 50% of your total earnings per month, which can go and service an EMI.
And this, for salaried professionals, is your take-home pay, not your CTC.
Yes, absolutely.
That's something
So because you see what happens is you need to have a little bit of margin. What if the interest rates rise and you have to pay 5,000-10,000 rupees extra? Maybe you want to do some regular recurring investment somewhere else and then make some profit, all of those things. So 30-35% is a very healthy level to be at. Banks, however, will be very happy to even finance you up to the extent of 50 or 55,000. Again, it depends on your income. So if your income is actually 10 lakhs a month, again, for the benefit of other viewers, then the bank might even be happy to give you an EMI of maybe 5 lakhs or 6 lakhs and something in that range. So 50-55 is the higher limit that you can assume that a bank will give you of your monthly income.
Right. So 30 to 50% ideally should be what of your take-home pay is what you should be willing to pay as EMI to the bank, and this, of course, includes all the EMIs that you're paying, not just the home loan EMI. So if you already have a car loan, a personal loan, etc., then you need to keep all of that in mind. Correct. And then decide as to how much EMI you are willing to pay for that home loan that you're taking. Next, let's take Mr. Wilson's question. He's written in through Facebook. He says he owns 3 apartments, of which he availed loans only for the second and the third properties. Now, he wants to know if he can claim tax exemption on the first, the second and the third property. If yes, then how much? Can you claim tax exemption on a property that does not have a loan on it?
Yes, exactly. So, because we don't have any loan on the first property, then the question of taking tax benefit obviously doesn't arise on that one. So again, here we have to make a little assumption that, because these questions are sort of incomplete, when people write on email. So we are making an assumption that you live in the property which you have availed by your, by your internal resources, and that the 2 properties on which you've taken loan are your second property and third property. So then in that scenario, automatically your first loan there's no question that arises. For your second and third property, they will go under the let out or the deemed let out provisions, and therefore whatever interest you are paying on your second and third properties will be exempted or deductible from your income. So that's the benefit that you can have then.
Right. And just a request to all our viewers, when you do send in questions, do try and put in as much information as possible. That will enable us and the experts who come in to give you a tailor-made, a customized answer, as it were, for each and every question that you are sending in. Vipin Suneja writes in on email. He wants to know if he can claim HRA on a house that is rented out in the same city in which he resides. He also wants to know if he can register a flat for 50 lakh rupees when he's paying 60 lakh rupees to the seller by check. Now, I don't think that is something that we would advise on this channel. That is,
yes.
Go on, Kartik.
But you see, Vipin, what you might want to do is, see your first question now, HRA benefit. So your HRA benefit triggers if you actually are paying rent, right? And that is a completely separate story from the fact whether you have a house in the same city or whether you don't have a house or whether you have multiple houses in the same city. If you are a salaried employee, you are getting house rent allowance from your employer. Now, if you are actually having a lease agreement with some third party and you are living in somebody else's property, you are actually paying rent to them, you will get your benefit of HRA irrespective of how many houses you have in the city. You see, whether one or many. So these two things are separate, and that's something that must be understood really clearly. Now, the other thing is, can you pay stamp duty and register a flat for 50 lakhs when you're paying 60 lakhs by check? Now, my sense is that if you're paying more than what your agreement is, as soon as you go to the sub-registrar's office, from what I understand, they will look at the ready reckoner rate. So typically the stamp duty these days is paid on the value which is higher of your agreement value and the value of the ready reckoner. So that's the general guideline which is used for the payment of stamp duties here. So now if your agreement is saying 50, but what is the ready reckoner rate saying, irrespective of what you've paid to the seller? So my sense is that instead of having these differential figures, try and keep it uniform, see the ready reckoner rate, try and be over it, not really under it. But of course, it has to make financial sense also to buy that property, meaning that the property has to be worth the rate that is pronounced by the ready reckoner. Because often it so happens that the ready reckoner might be quoting a value which is 10 or 20% high, and a lot of deals are actually not happening because of this.
But I don't think
provision.
that is really the problem over here, Kartik. What it looks to me is it's a completely different issue over
Correct.
here.
Yeah.
But Vipin, what you need to understand when you get into transactions like this is also that the 50 lakh that you're signing to on the agreement is at the end of the day is going to be the value of the flat. The flat is going to be valued starting at that 50 lakh rupees. When you've actually paid 10 lakhs more, why would you shortchange yourself?
It's extraordinary. Normally, it's the other way around.
It's the other way around.
You see,
exactly.
The agreement has a certain value, and but you are very clearly saying that you've paid it by check. So if you've actually paid 60 lakhs by checks, I'm really
and the check you need to
understand
is a legal instrument.
Yes.
There is a record that you are leaving for the government saying that you are paying 60 lakhs to the developer. And if that is the case, it really doesn't make sense for you to take a step like this. This will come back to bite you, in fact. And we would strongly recommend that you ask the developer to sign an agreement with you saying that the flat that you're buying
is worth
60 lakh rupees, which you're in fact paying for. And it's best that you stay away from such deals which smack of illegal practices as far as possible. Moving on, we have Suresh Chakraborty, who's written in on email. He says that he availed a home loan of 13 lakh rupees. Now he wants to know if he can pledge gold and avail another loan to pay back part of the home loan. Would you recommend that, Kartik?
Absolutely not, because see, you have your gold, you're trying to make it productive. Now, a very smart way of making the gold productive would be, I would think, sell it, because ultimately the gold will typically earn you somewhere in the range of any rate of inflation, say 7-8% on a long-term basis. And then you could use that money into a better asset, like maybe a mutual fund, equity mutual fund, or you could buy some blue chip shares, etc. And thereby you could grow your wealth even more. But remember, when you're going to pledge your gold, you're raising another loan against it. That loan's not going to be free. You will have to pay some interest on that as well. So you've taken a loan from one institution, gone and paid another institution. So you've saved some amount of 9% interest from your house loan, let's say from your home loan. But at the same time, you're probably paying about 9 or 10% or maybe 11% on your gold loan. So effectively, it doesn't make logical sense. I would rather, if you are in a hurry to prepay, then the best solution is sell the gold, because anyways is not an asset which is going to create a lot of wealth for you. Put it into an asset which will create wealth for you, and then from that asset, some point of time, try and make a prepayment. Maybe use the capital, but largely use the profits.
This is very similar to the Hindi saying where you say that you're gouging out a hole in a pot to plug another hole in the very same pot. It really doesn't make sense for you to raise one loan to repay another loan. There have to be better ways to do the same thing. We have Mr. Dev who's written in an email now. He says he owns a 4 BHK flat, which was his first purchased property. His wife is a homemaker and he'll be making all the payments. Now he wants to know if it is better to register the house in his wife's and his name jointly or in his name solely. He also wants to know if he should take the home loan in his name alone and if doing so will make any difference in case they plan to buy a property in future. You know, I don't see what is the problem in registering the name and property in the name of himself and his wife.
No, there is no problem. There are a couple of things to understand here really. So number one, if the wife is a homemaker, she does not have any income. So there is going to be no additional tax benefit. If you are thinking of claiming tax benefit and sometimes because of that people tend to put in two names, then you are not going to get the tax benefit. That tax benefit is only going to accrue to you. The loan application that you will be making is obviously going to be on your name because she does not have any financial credentials. So therefore the benefits and the taxation deductions etc. that you are going to get will only be in your name. Now from a social and emotional standpoint, maybe you want to think about it and probably put her name into the property as well because that makes the person feel good on a psychological level that, you know, I also have a property, this is also my house, and she does not feel that I'm living in my husband's house. So from that standpoint, you understand what I mean. But, you know, for the sense of generality, let me also say that this itself could become a problem in some years' time because look, a property is not like a bank account where you can add a name and remove a name. Once you add a name, then that person has title. Now, your agreement will say that the property is owned by two people, which means both the people will have equal rights on the property. Unless again in the agreement you say that I have 95% or 90% and my wife has 5% or 10% ownership of this property. Otherwise, if you don't specify, it becomes 50-50. So in case of a separation, I'm not suggesting for you, but these things happen. Say 15 years down the line, if there is a situation of that sort, then it could be a tricky situation because then this property becomes a joint property, although you are the only one who's paying the EMIs and loans. So please understand, complications even arise when the husband wants to buy a property, pay for it, and it is only bought in the name of the wife. Because at some point of time, there are situations where if the husband dies, property belongs to the wife, wife is also not there, goes to the children, you are on the road.
Kartik, it's very interesting what you're pointing out, but we've also done a lot of shows on this channel on women and property, women and real estate. And in fact, what we continually advise women, whether they are homemakers, whether they are, whether they are out earning a salary, earning a living, what we keep advising them is that when you do buy property, try and ensure that your name is also part or is on the property papers. That does safeguard your rights.
Absolutely.
Like Kartik just said, in case of a separation. So that is something that you need to keep in mind. But having said that, Kartik, the bigger question that he's asking over here, which would be of interest to all our viewers, in fact, is the difference between a co-owner and a co-applicant on the home loan. If you could just break that down for our viewers.
So the person who is borrowing, very simply put, also has to be an owner. But you could be an owner, but you need not be a borrower. Right, which is exactly his case.
Which is exactly what he's saying.
So husband and wife buying it together, but wife doesn't have income. That's all right. You could be the sole applicant for a loan. But as a co-owner, she has to have financial credentials if she has to also apply for the loan. So it's very, very straightforward, very simple.
So essentially what you're saying is co-owner means husband and wife both buying property together, jointly, both their names on the agreement, both of them are co-owners in the property.
Correct.
Now here it is not necessary that both of them take the home loan.
Absolutely.
Okay. Essentially the one who takes the home loan, the one who repays the home loan is the applicant.
That's right.
If, say, the husband or the wife, both of them choose to jointly apply for the home loan, then they become co-applicants. And if they intend to apply for the home loan, their names have to be on the agreement. So essentially what it boils down to is that if you intend to apply for a home loan, then you have to be a co-owner in that property. However, you can be a co-owner and not apply for the home loan. It is not essential that you apply for the home loan, right? Also, what about the tax benefits then? The tax benefit accrues to the man who pays, the person who pays
only to one
EMI?
person. And he also, additionally, he's also asked, what if he buys another property in future? So then the future property would depend on the future circumstance. So which means, say 5 years down the line, if his wife actually starts working, she has an income, then the scenario will change. Otherwise, exactly the same scenario will continue. So they will get the benefits alone. Wife will not get any tax benefits. You cannot even say that it's like a deemed transaction because she doesn't have income. So what is she going to deduct out of?
Right. One quick question.
Yes.
Say they take a joint home loan. Say his wife is working. I'm assuming that his wife is working.
Sure.
They take a joint home loan. In that case, how do you divide the tax benefits?
So tax benefits get divided according to what the agreement says. If the agreement is silent on the ownership ratio, then it gets divided 50-50 straight away. But if the agreement, and some agreements do say that one person has 60% ownership rights and the other one has 40%, then even the tax benefits get deducted in the same ratio.
Right. So those are things that you need to keep in mind if you are planning to buy property as joint owners. We have Rohit who sent in a question on our website now. He says that if he has an existing home loan, should he use his current savings to repay it or rather invest in something else with a higher or medium returns? He wants to know if he should invest someplace else. Where should he? Go on, Kartik. That's your favorite question.
I mean, that's absolutely brilliant. And in fact, I think it's a great thing that, people are actually asking the answer to the question in the question itself. So you should, by all means, do that, Rohit. Please go ahead, whatever surplus you have, and I've always been saying this thing, pay your EMI to the extent you can pay your EMI. Don't go overstretching on your EMI because your house is a great asset. It's already appreciating at 15%. Anything extra you have, go do an SIP into a mutual fund, do it for many years, and then you will see after a few years there'll be enough corpus available by which you have your capital intact, you use your profits, go make your prepayments, and that way you can knock down the loan from maybe a 15 or a 20-year tenure to as low as maybe 10 years or even 12 years. And sometimes if you do it very, very smartly, maybe in 8 years also you can finish off that loan. And then maybe you start the cycle again with another property. So those things can continue, but definitely do not be in a rush to prepay that loan off.
Right. Do not prepay that loan. Build another asset and knock down that home loan. Thank you very much, Kartik, for coming and answering all those questions. With that, it's a wrap on this edition of Property Hotline. However, if you do intend to buy property during the festive season or at any point in the year, do send in your questions. We will get them answered by the country's foremost experts. Stay tuned to Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.